Hello, welcome to TS Lombard. So at the time, the concern was about the wide current account deficit. Our view was that the current account deficit is not the best measure to look at for external solvency. It doesn't quite take into account the impact that a currency devaluation has on a nation's solvency position. The net foreign asset position is a more comprehensive measure, which had already swung into surplus and has since then become larger positive position. So really, UK solvency is not an issue at all. Not only on the conventional real effective exchange rate measures, but also one less monitored metric based on unit labor costs. On that measure, for the first time since the 1990s, sterling is now screening cheap, which really means that the UK has become very comprehensively competitive vis-à-vis its trading partners. So sterling is quite cheap. That's right. So I think the causality, in our view, would run from a weaker currency to higher inflation to higher gilt yields, rather than a weaker currency and lower yields being a reflection of a more accommodative policy. If anything, the economy has been very strong. Inflation outlook has become very, very hawkish. So the Bank of England cannot really justify further policy accommodation. So gilt yields will go higher, and at the same time sterling will strengthen at the same time. But the causality, the line of causation is from a weaker currency to a higher inflation to higher yields. That's right. I mean, given where we are, there's no justification for more than 100 basis points of yield advantage that US Treasuries enjoy over UK gilts. So I think that's likely to shrink. That's right, because a hard Brexit, to all intents and purposes, was largely in the price. The real concern in the marketplace was not a hard Brexit, but it was whether it would be a managed, smooth exit or whether it would be a disruptive, disorderly exit without any implementation transition phase. But really, today's speech gives greater clarity on that. Mrs. May has brought up a transition arrangement, although it won't be open-ended, but that is good enough. She's also suggested putting a new trade deal to a vote in Parliament, which suggests that there'll be adequate scrutiny of the new deal. So that broadly is bullish for sterling, because that takes away a whole load of political uncertainty that was hanging over sterling. That's right, because it's an economy that was already late cycle. And on top of that, you've had the impact of a 20% devaluation in the currency, which is massively bullish for the business cycle. So, as our chief economist has highlighted, this is likely to lead to overheating of the economy. Rather than raise a deflationary spiral type of concerns, it's going to raise overheating concerns. And the Bank of England will seriously find itself behind the curve. Correct, which is the sort of bullish macroeconomic call that you would typically find for any economy that is entering an overheating stage.